Are you holding the best medical insurance? What is the coverage you should have in your medical plan and things to know before buying a medical insurance? Hello, I'm Hailey, a licensed financial planner who advises on which insurance company's plan that best suit customer needs. Today, I would like to share with you on things to know before buying a medical insurance. If you already have medical insurance, you should also continue to watch until the end, so that you won't miss out something that you might not know, that make your nominee not able to get your claim as per your desire. There are a total of 7 things to know before buying a medical insurance plan. The first thing you need to know is how much the annual limit and lifetime limit for the medical card. In view of the increasing medical costs, owning a medical plan with high annual limit and lifetime limit is important. From this table, it can be seen that the medical costs in 20 years' time for stroke costing around 500,000 and kidney failure around 1 million. The latest medical plan is come with 1 million plus annual limit and unlimited lifetime limit. So it is important to review your medical plan on hand to avoid insufficient coverage. Don't wait it until the day we need it only realize that it is insufficient. The second thing is need to ensure that your medical plan is come with payer cover. This is a fantastic coverage offered by insurance companies, where insurance company will continue to pay the premium for life assured until the end of coverage period upon life assured total and permanent disability or diagnose any critical illness. The next thing will be coverage period. Is your policy cover and renewable until age 100? Please make sure that the policy you bought is until age 100, as there are some old policies that only cover until age 70. The fourth thing is sustainability of the policy. Do you know whether your policy is able to sustain until what age? In every insurance policy, there will be a table tabulated to show the estimated sustainability age. Don't wait until at the retirement age, only receive notice from insurance companies showing that your cash value is insufficient and request you for a huge top-up, otherwise your policy will be lapsed. Other than the above, you need to go through your policy whether there is any deductible or co-insurance in your policies. Is this the affordable amount that you're able to pay? In addition, is there any limitation cap on specific treatment claim? You may compare with few insurance companies' plan to check which is the best coverage offered. For easier way, you can just seek financial planner like us. We able to compare for you the differences one by one. Item number 6 will be very important, which is non-disclosure clause. When buying your insurance plan, please read the health questionnaire and make sure you declare all the information that required to disclose. If there is any non-disclosure, it may result in your claim being rejected in future and policies being suspended. You may refer to this video for a real example. The last, which is item number 7, will be who is the nominee that you're going to put. According to Financial Services Act 2013, in Schedule 10, Paragraph 5 Sub 1, it states that a nomination by a policy owner other than a Muslim policy owner shall create a trust in favor of the nominee of the policy monies payable upon the death of the policy owner, if the nominee is his spouse or child, or where is no spouse or child living at the time of nomination, the nominee is his parent. To simplify, if life assured is unmarried and no kids, if the nominee is parents, then this is a trust policy. The sum assured payout will be debt protected and not fall under the life assured estate. However, if the unmarried life assured put the nomination as siblings, then this is a non-trust policy. The sibling will act as administrator. The money is not belong to the sibling, but is considered as part of the estate and distribute based on will of the life assured. If without a will, the money will be distributed in accordance to Distribution Act 1958. Further details on Distribution Act 1958 can refer to this video. In such case, the beneficiary who gotten the money might not be the one that you wish to give to. However, if life assured married, with or without kids, and nominate spouse or kids as nominee, then this will be a trust policy. If the nominee is other than spouse and kids, then this is non-trust policy. If the life assured really decided to nominate someone who is non-trust, then they need to have further arrangement for their estate planning. To summarize, here is the 7 points to take note for your medical plan. Number 1. To check the annual limit and lifetime limit. Number 2. Encourage to have payer cover. Number 3. Check on coverage period of the plan. Number 4. Sustainability of the policy. Number 5. Any deductible, co-insurance or limitation capping on the treatment costs. Number 6. To take note on non-disclosure clause. Number 7. Nominee for your policy. As a conclusion, we need to make sure that the medical plan that we choose suit our needs and budget. You may seek advice from financial planner like us in order to avoid buying an inappropriate insurance. We will also advise based on your needs from protection until wealth distribution to ensure that your nominee able to get the claim as per your wish in future. If you would like to have a policy review or interested to have a quotation comparison that suit your needs, you may message me or fill in the form below. That's all for today. If you find this video is added value to you, please like and share to your friends and family. If you haven't subscribed my channel, please subscribe and remember to click the bell beside it so that you won't miss out any financial planning sharing in future. Bye bye.